And it's a brand new week. Good morning, good evening, wherever in the world you're watching from. It's Business Morning Live on Channels Television. I'm Ladi Williams. Great to have you join us. Let's take a look at what's happening in the market. We see oil prices slipped $2 a barrel in early Asian trading today, following a second straight weekly decline after world consumers announced plans to release a record volume of crude and oil products from strategic stocks, and as China lockdown continued. Brent crude fell $2.04 to $100.74 a barrel, while U.S. West Texas Intermediate crude lost about $1.94 to $96.32 a barrel. Last week, Brent dropped 1.5%, while U.S. oil slid 1% for several weeks. The benchmarks have been at their most volatile since June 2020. Market has been watching developments in China, where authorities have kept Shanghai, a city of 26 million people, a lockdown under its zero tolerance for COVID-19, China's world's biggest oil importer. And Chicago wheat futures rose past $10.05 per bushel, a one-week high and 25% above prices before the war in Ukraine, as investors weighed on the FAO report and the impact of additional sanctions on grain supply. Wheat production data in 2022 is forecasted to drop below the 5-year average in Ukraine, with at least 20% of winter plantations not being harvested due to the direct destruction, constrained access, or lack of recourses to harvest the crop. Meanwhile, the FAO emphasized that there is high uncertainty with an expected wheat output for Russia, as sweeping sanctions and a declining economy would raise shortages of agricultural inputs. Yet Russia and Ukraine were responsible for nearly 30% of world wheat exports before the war. Meanwhile, wheat utilization forecasts were scaled down by 2.4 million tons due to lower feed use in India and the European Union. All right, so after the break, we'll drill down on the proposed review of the revenue sharing formula for the 3 tiers of government in Nigeria. That's in a moment. Do stay with us. All right, so our first conversation, the Revenue Mobilization, Allocation and Fiscal Commission has finally presented the report of the review of the vertical revenue allocation formula to the president. New formula proposes 45.17% for the federal government, 29.79% for states, 21.04% for local governments. For analysis, we have Paul Alaje, senior economist, SPM professionals, join us on the program. Good morning. Good to have you.
Yeah, good morning, and thank you so much for having me.
This proposed formula, we're seeing 45% there for the federal government. What are your thoughts on these?
Well, I think it's an improvement from where we're coming from. Federal government used to have at least 3% higher than what the government at the center would be having now, and that also shows that the federation is thinking of giving more power to the subnationals, the state, and more importantly, local government, where we say that we have most of our people and is the closest government to the people. So I think it's the right decision to take by giving more resources to state, giving more resources even to local government, so that our pressure that we have on federal government will significantly reduce. The truth is, I don't think central government alone is sufficient enough to solve enormous problem that our economy is faced with. We therefore need subnational to become responsible. I only hope that as more fund will be given to the subnational, more responsibility will also accompany the subnational, even as we have it today. But this revenue adjustment, is yet to be the law. The president said we will wait to see what the constitutional review we look like. Ordinarily, should have taken it to the National Assembly and see if we can make some amends. But he said he will wait for the National Assembly to conclude on the ongoing constitutional amendment process and see if that will then be adjusted or be accommodated in the ongoing exercise. I'm also very hopeful that we'll give more power to the subnational and see significant improvement in that regards.
Quite interesting. But will it be fair for the federal government to shed about 33.3%, as proposed by the new formula?
Well, I think it's also going to have negative impact on federal government, and whether it is fair or not is another conversation entirely. The truth is that the federation needs to come together. The pots that we are currently spending from is getting smaller and smaller by the day. We need to cook more to prepare more soup. So loss of 1%, loss of 0.1% will impact any institution. But we are saying that we are currently faced with security challenges. We are currently faced with infrastructural challenges. We are faced with power concerns. We are faced with unemployment concerns. And if you go to the states, apart from Lagos and 4 other states with the FCT, and most places people believe the only thing they live on is civil service. You hear them, it is Nigeria we coin a word for a whole state, civil service state. So we need to see how states can encourage private sector to thrive, not just federal government. And you can look at what our foreign direct investment is saying. In the last report last year, you know, more than 20 states did not attract one major investment from abroad to the state. How will people get new jobs? And we have in all these states higher institutions of learning, colleges of education, polytechnics, universities, and so on and so forth. So we're bringing out so-called graduates from these institutions, but we are not preparing for where they will work. But there is always the devil's workshop that is willing to employ people who are idle and maybe indolent or not part-time. That is why we need to give, it's a concern to federal government, no doubt, but this is a necessary pain so that we can improve the subnational for them to grow. But you know, it may be no pain at all. If we can improve what we earn, if we improve what we generate, then we can say that yes, even though it has reduced to some extent, but the impact will not be as tremendous as we may be imagining.
Yeah, but, you know, talking about improving, you know, revenue at this point, there's been this, you know, debate, you know, saying, oh, it's a revenue problem. Some are saying, no, it's a spending problem. What do you think?
Well, I think we have both problems. Revenue problem is real. President Buhari, when he laid the budget in 2018, was speaking to the members of National Assembly that the biggest challenge today is not who will win 2019 election. That was around November, December 2018. And the president was so correct. Because look at 2019, after the election, what was the impact? What helped us to have some growth in 2019 was the election spending. After the election spending, COVID came in 2020, the economy went into negative recession. 2021, we are trying to come out of it. Even till now, the impact of lockdown is still very evident on our economy because unemployment figure are still there. Poverty rate is higher. So the challenge, one key challenge we have is revenue, no doubt. But spending is another challenge. And what do we spend on? A country that spends 70% and more on consumption should not be surprised why we are having huge unemployment, huge poverty, because what drives economy is not just consumption, it is investment. So we continue to spend less and less on investment. There are states that spend as high as 80%, and they wonder why kidnapping, banditry, while a sit-at-home order are ravaging the whole place. Because there is no sufficient thing. Citizens of those states can say that this is what government has done for us. So as much as it's important for us to end insecurity, you cannot end insecurity without solving basic economic challenges that we have, and they are real. So all of us are battling economic insecurity. Most Nigerians. Then we now have people that are battling with guns and machetes coming from insurgents, terrorists, bomb blasts, and so on and so forth. But all of us have a fair share of insecurity, whether the real insecurity in terms of life and property or economic insecurity. So how do we spend money? And this is very important for all government, federal, say, states, and local. At least 50% of what spendings must go into capital. That's one. Two, borrowings. Because that's the option, borrowing. Government quickly, oh, let's go borrow. We are getting close to 40 trillion. And I wonder, government is saying we are spending this thing, we are spending it on good things, we are constructing roads, we are doing that. My concern is this. When you look at our borrowing and what we generate from oil, when we were much younger, we heard that Nigeria flows with milk and honey. Some of the milk that we talk about is the oil in Niger Delta. If money we are borrowing now surpasses that of Niger Delta in terms of revenue, because we now hear from authorities that over 80% of the oil are being stolen, or they are being stolen even as we speak today. Is that not a major concern? So if you continue to embark on a journey that seems not to give you a sufficient return, then should we continue to fire further, you know, on that journey? Because through my own understanding, we continue to increase our service to GDP, debt service to revenue, it's getting worse. By the day, IMF is warning us, World Bank is warning us. A number of countries that have not even warned Nigeria are now saying, hey guys, you need to be cautious, you need to take care. This is getting worse. But government is saying, this perhaps is the only option we have. My concern is that I think our government needs to become more innovative. And this is the thing you and your colleagues, you know, we've seen your media as one of the credible ones. You need to ask this politician. Yeah, we know you have all the political strategy, but how would you do it? How would you generate revenue? How would you reduce borrowing? How would you readjust spendings? If they can answer the questions to convince Nigeria, then we can know that the next round of election will not just be another set of having politicians that will dash money around, and at the end of the day, for another 4 or 8 years, we'll be suffering.
That is the how. That's the $1 million question at this point. How? Anyway, you know, we've seen, you know, states, we've trying to find out how states can actually generate, you know, more revenue at this point, because you see some of these states, they have resources, but yet they're still very poor. And I'm wondering, how can these states actually, you know, generate revenue at this point?
Well, my favorite book says, the labor of the fool wearied them because they don't know the way to the market. If you are a chief executive in the state, you are quote and unquote a chief economist of that state. So we have states, I was with one of the chief executives, one of the in the state, and he said, oh, they are not generating so much in IGR. And I said, well, I've been to your state and all I've seen is wealth. Whether you are making money from this wealth is a different issue entirely. And he said, oh, it's going to take time. I said, see, everybody in your state is making calls. I said, from the time I've been picked at the airport till now, everyone I've seen have been on their phones. How much comes to your pocket, Mr. Governor? Which is a question that the executive is wondering, so how do we make money? Again, how? Our politician, and I think it's something we should consider. When we have chief executive, when our people have chosen their leaders, whether rightly or wrongly, it doesn't matter. We need to train them on how to make money for the state, not for their personal, not for their personal pocket this time. Because if we don't, it will come back to haunt us. There is an how to generate money in the state. And I've said on your show before that I don't think state governors cumulatively, I mean states subnational at the state level, should do anything less than 5 trillion naira in revenue. I don't think they should do that. Because when you look at telco sector, we have individual companies even declaring trillions and trillions in revenue and in profit. Whether that is official or not is another conversation. But there is something Lagos State seems to have done. There is something a few other states are doing. I understand that Lagos warehouses headquarters of several institutions, but apart from warehousing them, we knew a particular year where Lagos was going to suffer from revenue for poor revenue generation. Then Lagos put think tanks together to help think of how do we then generate this money. Lagos did not just become conscious that we have all these headquarters, you know, all around us, but they realized that there are a few things that we could do. There is no place in Nigeria where what states will generate in terms of IGR should be less than what they will spend, at least on their recurrent expenditure. But that's not what we have. So a lot of revenue are there. States, governors, and maybe their commissioners, the commissioner of finance here and there, they just need to get serious to see government business as a major business in which they can encourage private sector to help them get the jobs, to pair them with investment. When you have more private sector with investment, the first thing that happens is that they are going to pay corporate income tax, which goes to federal government. They are going to be paying VAT, because when people buy from them, they charge VAT, which goes to federal, local, and state. And more importantly, they will collect taxes from the employees. And that is a lot of revenue for states in that regard. So we need to look at all of these things.
What about resources?
Rent, grants, and all of those things are the things that goes there. When it comes to natural resource, a different conversation entirely.
Because I feel like their hands are tied, you know, when it comes to that.
I really don't think so. Their hands might appear tired, but what is the effort that has been made? You know, even the states that shares the same political party, with the government at the center, they also suffer. We see them in the north, we see them in the west, we see them in the east, we see them even in the south, all over Nigeria. It is because those at the ends of affairs must not see Abuja money as go-to money. They must understand that what will help them is not the resources that is underneath their foot, but the resources that is in their brains. So when the person at the end of affairs does not value what is the content of the brain of individual in the state, then the next thing they can look at and looking up to the brain and looking up above, they will be looking under their foot. And under their foot has lag. Before you start extracting, is subject to banditry. We've seen what happened in Zamfara State, for instance. And we have seen what is happening in a few other states, but I will not mention them, where even monarchs are involved directly in illegally extracting natural resources from our country. So it's a big concern, and I hope that authorities will do the right thing in no time.
Right, and obviously with the war in Ukraine, we've seen fears now for a global food crisis actually looming, and this is coming at a time where most African countries are actually already feeling the pinch of all of this with rising energy costs. What for you is the realistic way, right now for the government to tackle this major issue globally with geopolitical tension? Well,
for me, I believe Nigeria has competitive cost advantage over a lot of countries in some items, which includes wheat. Wheat will grow in Nigeria between 3 to 4 months. We have a lot of areas, especially the core north and the north central, where wheat will grow easily. But people need direction. People need coordination. We cannot allow just individual farmers that we don't have numbers, we don't have data to go just grow wheat or other agro outputs or produce that we need as a country. And I've recommended to government, see, if you can guarantee security, every year, every time, we have more than 250,000 coppers. Where are they? What are they doing? We also have research institutes and so on and so forth, professors, doctors, and lecturers, and technical people, even at Agri Research Institute here and there, all over the country. Why can't we create farm villages or farm settlements where we have coppers with adequate security in these areas and look at things that we import the most for food, basic concern, and make them available? You are doing two things by making such policy. Private sector will now be guaranteed of input to their machines. That will grow investment in the country. Foreign direct investment will come, local direct investment will grow. Then unemployment figure at 33.1%, according to of the labor force, by the way, according to the National Bureau of Statistics, will reduce significantly. See, for every country that have the highest population in a region or in a continent, what comes first is factory. Government must do our part, and what is the part? Make power available, improve other infrastructure. But factory will come first when all of these things has been done.
So much to unpack there, and obviously we're at a point where revenue is quite needed, but also spending. At this point. Thank you so much, Mr. Alaje.
Thank you so much.
Senior economist, SPM professionals. Always great having your insight on the program. All right, so after the break, I'll be discussing cybersecurity and data protection in Nigeria. That's in a moment. Do stay with us. All right, now to our next conversation. Acronis, a leader in cyber protection, has released its annual Cyber Protection Week Global Report for 2022. Time to this year's World Backup Day. One of the report key findings last year was that 80% of organizations ran as many as 10 solutions simultaneously for data protection and cybersecurity, yet more than half of them suffered downtime because of data loss. Well, joining us now is Leora Rosenblum, Executive Director, Maple Leaf. Join us right here in the studio. Great to have you on the program. Good morning.
Good morning.
So quite an interesting report there with, organizations running as much as 10 solutions, yet they're still being affected. Can you tell us why this is happening?
Oh, well, this is exactly one of the reasons why this is happening, because imagine you have 10 silos, different solutions, and gaps in between. And this is where the cyber attackers can find the gaps to jump in and to harm the system. So in a chronic situation, traditionally, IT business grew up from enterprise business. In enterprise business, your security was within your perimeter, your walls. And this is how, when internet was established, firewalls were put on the perimeter walls of the organization. In today's world, we are out of walls, we're out of perimeter, we're all over. And even political and geopolitical boundaries on the internet are very limited. And therefore, the traditional approach where you can patch, okay, let's do backup, let's do a little bit of antivirus, anti-malware, and maybe email security doesn't work. Because when an attacker comes, he doesn't think this way. He thinks, how can I harm this customer? And I think this is one of the reasons we see increase in the cyber attacks and not decrease the more solutions you stack in your environment. Another reason might be, I've been always saying that everybody looks at backup as a supporting tool to help business to recover. But nobody thinks that backup is actually a very, very cumbersome expertise.
Yeah, it's quite hard backing up every other day or 2 weeks.
It's not just this, yes. When you back up, you need to know that your application, your business application that supplies your business consists of different layers. It can be database, metadata on the database, engine of the application, and access itself, and maybe some external data. If you don't back up this in an orchestrated, integrated way, and besides that, maybe there is some ransomware that is hiding and you're backing up this ransomware as well, if you don't do it right, it's not going to work. And to do it right, you need experience and expertise in this specific database application technology for more than 5-10 years.
Right.
I don't see on the market, especially in our Nigerian market, many experts in this
quite
area.
Interesting. And you do email protection, you're protecting your data, so many things. But is there like an all-in-one solution, that just you could just plug and play, that protects all of your vital information at once?
Yes. So traditionally, again, I want to go back to this. We looked at the solution as an isolated solution. And this isolated solution might consist from backup. And, it's not about backup, it's about recovery. We don't care about backup. It would consist from cyber security. And in many cases, the major cyber security boundary would be put on a perimeter, like with firewalls, VPNs, and which I call channel security. But our main goal is to protect our IP, our critical assets, which is workloads, which is endpoints, which is our mobile devices that today have more business critical information than, some critical servers.
Right.
So Acronis discovered this situation a few years ago, that actually something holistic, something all-in-one is like you have eye doctor and the dentist and the psychotherapist, yes, but who needs to take a decision? It's your general practitioner, it's your physician that understands the global picture. So Acronis comes with a solution that says we need to protect critical assets in several aspects, in holistic approach. They call it SAPAS. It's safety. Data must be safe and recoverable. Data must be accessibility, but accessible in a controlled way. It's not that you can access what I can access and everybody's,
right.
Like on the internet happens.
Okay.
Privacy. Customer data, the privacy issue becomes more and more critical. authenticity. I think one of the biggest challenges today, since in Nigeria, I still can see those paper documents when you sign and you file somewhere, but today world goes digital. The moment you have document in PDF, it's so easy to tamper with it and to make changes, and suddenly a contract of $3 million becomes $5 million without you making, even seeing anything happening. Yes, so it's very, very important.
And you know, recently I saw, you know, a headline, you know, some platforms like betting platforms, you know, in Nigeria were compromised, you know, recently, and I think they lost control of their platform, and that was quite a big story. But you know, for you, what's the solution, you know, for this kind of issue that we've seen just happening in Nigeria?
Yes, so the solution is all-in-one solution that takes into consideration security of data, of access, of system, data protection, meaning nobody can cause a loss of your data, and more advanced and cost-efficient management, all in one. So this is what Acronis gives today to managed service providers and to their customers. The solution covers end-to-end individuals and largest enterprises in the world, and as well as public sector, healthcare, finance, education. So the solution is very powerful, but what's more important, this solution enables people who is willing to become professional. They give, Acronis gives unified portal that everybody can log in and study security, data availability, and other aspects in a modern way, and apply them for their organization or for their customers.
Right, and I'll take you to another issue now. You know, I've seen, you know, a couple of brands, you know, have their images, you know, used on the internet, you know, to scam, you know, people. Like, for instance, I saw one recently, and it says Channels TV, you know, is promoting some kind of guaranteed return, and that obviously did not come for us. That was a scam. You see the way our name is spelled there, it's quite wrong. But you know, we've seen people actually fall for these scams, and I'm wondering, what would you advise organizations, you know, to do, you know, in situations like this where your image is being used to compromise, used to scam people?
Yes. So first of all, the problem starts from the ground. So I suggest organizations not to wait until they see the scam, but to act proactively and to create a blueprint, security blueprint of how specific organization tackles the specific issue. I would say there is no one-size-fits-all. Protection of channel TV from scammers is not the same as protection of access bank from scammers. So there are different layers of solutions, processes, and people that have to be involved to avoid such a situation. For example, it must be very clear where the scam comes from, because your IP address is the real IP address and is usually certified, verified by specific authorities. Secondly, you must be more connected to a global community. By the way, one of the most important things that Acronis provides, you are not alone. We recently established data center here in Nigeria for customers to be able to comply with the government regulations, with privacy policies, and so on. At the same time, create local jobs, but not for somebody else. For customers being able to pay in local currency and not with USD or other heavy.
Quite interesting because obviously right now getting your hands on USD is not that easy. But, you know, this is a time, you know, we've seen geopolitical tension in the world at this point. We've seen, you know, the war in Ukraine, and obviously that has raised, you know, alerts, you know, about cybersecurity globally. So for you, what should Nigerian businesses and organizations, you know, be doing, you know, at this point to step up, you know, the level of security?
I would say, first of all, I'm very big fan of Ernesto Sirolli. And he proposed once upon a time, if you want to build a successful business, shut up and listen. So I suggest that each and every business will open their situation, their infrastructure, and performs a thorough assessment and gap analysis. And based on this, they need to decide which protection is going to happen locally, which protection is going to be happening in the cloud, and which protection must be managed by top consultants, top security experts in the world, which Acron is connected to on a daily basis.
Quite interesting, because the cost of having compromised data, you know, can be enormous, you know, depending on the size of the company. Thank you so much, Laura Rosenblum, Executive Director, Maple Leaf. It was great having you on the program today.
Thank you.
All right, now, so we're gonna look at what's happening in the market. We have Willie Bong right there. Will, great to have you. First day of the week. How's it looking?
Good morning, Laddie. It's looking, well, pretty good. Well, from last week's, since we're going to be talking about last week's transactions, we saw that there was an accretion in the Forex reserves. It was up by $84.25 million week on week to $39.63 billion as at the April the 6th. Now, but trading activity in the forex market was negative last week. We saw total turnover dipped by 40.11% to $534.08 million. Now, for the analysis of that, we see that total value of transactions at the FX spot market, that's the I&E window, dipped by 16.91% to $430.59 million, while the FX derivatives, we saw a 72.29% drop there to $103.49 million. Now, however, despite this drop that we're seeing, the Naira inched up at the NAFEX window by 0.01% to 415 Naira 76 kobo to a dollar, against 415.81, 415 Naira 81 kobo to a dollar that we saw in the previous week. Now, fixed income markets, a bit dreary there. Some, you know, the space was quite mixed last week. Little or no activities was witnessed across board. Treasury bills market, we saw some bullish activities, you know, pockets of activities here and there. But we have Dimeji Obasa to tell us really what's going on in the fixed income space and probably giving us an outlook for this week. Good morning, Dimeji.
Good morning, Will.
So now, there was not a lot of movement in the fixed income market last week. What caused it last week?
Basically, what we've seen over the last 1 week in the fixed income market has been quiet trading. This is as a result of investors and other market participants being very cautious. We're starting to see a reversal of the downward trend in rates that has been the case from the beginning of the year, and as such, traders and market participants are being very cautious not to take any significant active positions in view of the expectations of a rise in rates.
Now, how much is the trend in the equities market driving the fixed income space right now, the current liquidity levels, given the current liquidity levels that we have?
For the most part, I would say that we are not seeing the impact of the trend in the equities market affecting the fixed income market. What is really the case for the fixed income market is almost investor apathy and, you know, the expectation of higher rates causing investors to either stay quiet or be bearish on their positions.
Okay, so inflation numbers are expected, for March inflation numbers are expected from the NBS this week. That's the National Bureau of Statistics. How will that shape the direction of yields? We're still talking about the direction of yields in the fixed income space. How do you think these inflation numbers, what do you project that's going to be out, and what do you think how is it going to shape the market?
So we project a slight increase in the inflation rate as being the trend for, in recent past. However, we've not really seen the market react directly to the inflation rate. Yes, we understand that it's a very important fundamental point to look at, right, or a fundamental variable to consider with pricing local securities. But that has not really been the case, as we've had negative yields for the better part of the last 1 year. So yes, we expect that the inflation rate to come out slightly higher. The market is already reversing its downward trend in yields. We're already seeing that upward trend sort of kick in. We've seen market participants start to quote higher bids for treasury bills and bonds. So we expect that rates in these markets will continue to increase, but we do not foresee that the inflation figures that would be put out by the Bureau of Statistics would significantly change, the market dynamics as is.
Now, thank you so much, Obasa. We are just looking at how investors are going to probably hedge against inflation, if it's going to come out higher, what commodities. Maybe we probably start thinking of diversifying, looking at commodities, adding commodities to their portfolio to see, especially with the geopolitical tension, what we're seeing in Russia and Ukraine. Maybe investors are looking at other, investments space that they can invest in and see how much profit they can get from there. So thank you so much, Major Obasa, fixed income dealer at Access Bank, for joining us today. Thank you so much.
Thank you.
Now, so Ladi, we move over to the equities market where we're going to end off today. And we see that the equities market didn't perform so well last week. We saw 0.45% drop in week on week. Yeah. And we're hoping that this week, equities investors are going to move back and, push us to the green zone, because people are probably moving, hedging to, I don't know what they're hedging against, but inflation numbers are going to be out, and we're going to see how they react.
Globally, all investors are trying to hedge against right now is inflation. We're seeing most central bankers hiking rates right now, and actually looking at more aggressive, rate hike at this point. True. But at the end of the day, we're looking for that hedge, that sweet hedge against inflation. All right, thank you so much, Will. All right, after the break, we head to London. That's a moment. Do stay with us. All right, now let's head on to the UK. We have Juliana right there with economic data out in the morning this morning. Great to have Juliana. So UK economic growth slowed by more than expected in February, with Britain's industrial output dropping, as manufacturers are struggling with inputs at this point. Tell us more.
That's right. Good morning, Laddie. Pretty disappointing set of data we got from the Office for National Statistics for February GDP in the UK. It only grew 0.1%. Now, this compares to growth of 0.8% in January, and is much lower than what economists had forecast at 0.3%. There appears to be a couple of factors. First of all, we know that the UK is a service-based economy. So in terms of services, hospitality, leisure, all doing really well in February, and that's obviously because we know that COVID restrictions were pretty much lifted in its entirety, so people were out and about and spending again. But supply chain issues is what is dominating the slowdown in the growth, particularly from China. We know that there's several lockdowns that were taking place in February, continued lockdowns, and this is had a knock-on effect to supply chains. And of course, you can't talk about the British economy and not talk about the weather. I don't know if you remember, Laddie, but we were battered by a number of different storms in February. This had a knock-on effect in the housing sector, manufacturing as well. Lots of shutdowns, lots of buildings were destroyed. But I think now the question is, what happens next? Because, of course, when we look at this data, we're looking in the rearview mirror. This doesn't take into account Russia's invasion of Ukraine, which happened a month later. Also, as well, the cost of of living, the squeeze on families, all you have to do is switch on a TV or pick up a paper. That is what is dominating the discourse here in the UK. If people are being told that wages are slowing, bills and items are getting very expensive, are people going to be spending? That is a major concern. Unfortunately, we haven't heard from our Chancellor Rishi Sunak. He is dogged with his own scandal at the moment. In fact, his wife and family have moved out of number 11, which is right next door to the Prime Minister, because of this tax scandal. But yeah, not great news for the UK economy. But the headline is we are still now 1.5% larger in terms of economic growth than we were pre-COVID.
Quite interesting there. But, you know, it's a new week. What are the economic data we're expecting for the week?
Yep, it's a new week, short week. We've got the Easter bank holiday weekend, so it's a slow week here. Friday, the markets will be down. We've got a slew of economic data, which starts tomorrow. Well, it started today with the GDP, but tomorrow we've got unemployment data. Unemployment has been historically and internationally low. We're expecting that to drop from about 3.9 to 3.8%. The big one that everybody will be focusing on is on Wednesday. This is inflation data. Inflation currently at 6.2%. I think the forecast is that it's going to be about 7%. It could go much higher than that. According to the Bank of England, it could even be up to about 8%. Hopefully it won't be double figures, but we are feeling the crunch when you go to get your coffee. It's much more expensive. And then on Friday, we've got retail sales figures. Again, I think economists are putting that down. Thursday, we're getting retail sales figures. Could be down by about 0.3%, so we could see a contraction because a lot of people are worrying. A lot of people are second-guessing that extra splurge, but of course, it's the extra splurge that keeps the economy going, so we'll be keeping our eyes out for that data.
The extra splurge. I guess investors will be watching out, too, for that inflation data coming out on Wednesday. Thanks so much, Juliana. Enjoy the rest of your day.
Thank you.
All right, now let's look at other markets. We see the crypto sentiment right now, looking at the fear greed index in the market, we're seeing about 32 points of 100. That's fear. Right now, the market, it was fear last Friday and back in fear, even though we're tending towards neutral and greed earlier last week. We're looking at the market cap there. It's lost the $2 trillion mark. It's down about 1.77% this morning. Volume traded, $70.22 billion. We've seen that happening on the sell-offs this morning with Bitcoin and altcoins. Bitcoin dominance is at 41.29%. We see Bitcoin price 42,231. It did attempt an upside correction above 42,500, but it climbed above the 43,000 level, but faced a strong selling interest near 43,400. Price also struggled to stay above the 43,000 level. See Ethereum there, it's down about 2.21% this morning. Let's bring in Olumide Adesina now, financial market analyst. Hello, Olumide. Good morning. Happy Monday.
Yes, Red Monday, Laji.
Red Monday. Quite red. And, you know, and traders are saying now that Bitcoin could actually revisit the 40K level, you know, at this point. How are you seeing it?
Yeah, I think I share that sentiment because you need to understand that despite the fact that we've seen stronger macros, positive macros in the crypto market, Bitcoin had failed to reclaim above the $45,000 bench level. And the reason is because you need to understand that Luna Foundation really recently owed about 40,000 Bitcoin. So one would have expected Bitcoin liquidity to have tightened, and the fact that there are less coins on the exchange, price will actually pop up. And the fact that Elon Musk over the weekend announced the fact that they could adopt Dogecoin as a form of Twitter Blue subscription also was expected to really trigger rally. But what we are seeing right now is that despite their growing adoption in the metaverse and the crypto market, the dollar is weighing the crypto market down. And presently, what market pundits are looking at is Bitcoin's 100-day moving average, and that is really at $41,600 support level. Any breach below that, then you might see 38,000 coming back in shape. So pretty much all he's saying is that the dollar seems to be the king and is really weighing supreme hard on not just the crypto markets, many risky assets, including growth stocks like the likes of them, Apple, Google, and so on. But having said that, I think the narrative for this week is that we're expecting to see some economic data. So any strong positivity around the U.S. economy will definitely weaken the boost momentum in the crypto market. And largely, honestly, I think it's fair to say that Bitcoin might fall back below $40,000.
Quite interesting. But what do you see traders doing this week? Will they be running into stable coins, or have they priced in, most of the action coming out this week?
Yeah, I think it's a mixed bag. Yeah, we're seeing growing amount of investors staying on the sideline. Also, recent heat maps from Bloomberg Terminal suggest that a lot of institutional investors are moving their funds to safe haven currency, and that's why we are seeing the US dollar index as record 2-year high. So that really tells the narrative of where investors are putting their funds. But having said that, the growing adoption in the crypto market will really trigger some support. We're seeing banks like HSBC, JP Morgan Chase introducing the metaverse environment to reach wealthy clients. So I think that will really give some pushing. But having said that, the market seems to be going out of liquidity, largely.
Quite interesting. But, with all of this happening at this point, what altcoins do you think might actually, stay strong, even though we're seeing quite a bleak outlook for the price of Bitcoin?
Yeah, I think the same narrative is that coins that have really, really strong use case and the ones that have some form of influence, talking like Dogecoin, for example. We've seen Dogecoin coming from 11 cent low to almost 15 cents because of Elon Musk influence around the ecosystem. But when we really look at utility tokens, then you look at tokens having a high exposure to the metaverse, and that's why Sandbox is kind of my top pick for that. Then also you need to look at altcoins that have NFTs exposure, especially those built on that line. So definitely that's why we are seeing Ethereum breaking above $3,000, and also Solana also has decent upside in those gains. But I think interestingly, the game changer will be XRP, because it seems like the legal tussle between the United States Securities Exchange Commission might come to settlement, and the growing adoption by banks really give that asset a bullish
Quite interesting. XRP has been quite stable, for a while now, around that 80 cent mark. And when you look at traders actually, looking at price action, maybe in the next few years, they keep saying XRP is not going to go really far. They keep projecting maybe $1 something. Well, Olumide, we'll have that discussion another time. Thank you so much, Olumide. Always good to talk to you.
Thank you.
All right, now let's look at the top of the market cap there. It's mostly red on that counter. We see BNB down about 2.70%. Cardano there almost losing the dollar, the $1 mark. It's $1.01. That's down about 2.65%. And Solana, $110, has lost that $130 market. Was trading out just a few weeks ago. It's down 2.16%. And XRP there down below the 80 cents. And we see top 5 losers. It's double-digit losses for Waves. We see Amina there down 9.96%. It's mostly quite big losses we're seeing this morning in the crypto market. All right, that's it for the markets, and that's a wrap on the program. Thank you so much for watching. Don't forget to join us at 1:30 p.m. on Business Incorporated for more updates and developments in the world of business. Thank you for watching. I'm Ladi Williams. Bye for now.